After a difficult 2020, prospects for salaries are looking better for workers in the Asia-Pacific. Amid lockdowns and falling revenues, about 30% of private sector firms in the region froze pay last year to cut down costs. This year, only 13% expect to freeze pay. In a sign of optimism, 85% of global companies surveyed by consultancy firm Willis Towers Watson said they will increase pay this year. For developing countries, the salary rise could average 6.2%, while in advanced economies, the increase will be 2.5%. In the Asia-Pacific, the average pay rise forecast is 5.3%, just slightly below the revised 5.4% increase in 2020 and the 5.6% rise in 2019.
There are increases as far as spend is concerned, but I think the view is just to be cautiously optimistic, because while we're hearing about vaccines, a lot of it depends on deployment across different countries, and so organizations are taking a bit of a wait and watch approach to see how it'll go.
For Singapore, an average increment of 3.5% is expected in 2021, lower than the previous 2 years.
High-tech as an industry is continuing to do well. We're also seeing pharma and healthcare do well and project, higher increases relatively. There are, of course, industries that have been affected by the pandemic in an adverse manner, and a large part of those have been around the travel industry or physical retail, and so we do see that there might be a little bit of conservatism in those industries.
A survey by hiring firm Michael Page Singapore shows annual salary increasing by 3.5% in the tech sector and 2.8% in healthcare and life sciences. Pay rises in the retail, property and construction sectors are expected to be slightly above zero.
The mindset is really to save jobs, as many jobs as you can. If your industry or your area of expertise do not allow you to, then you've got to be very honest and you can't increase the pay. The idea is to make sure that you reward people based on the performance at this point of time.
Consultancy firm Mercer says economic uncertainties are pushing employers in the region to be more prudent.
Majority would still give a pay increase, but it could be lower than they would give normally. There could be pay deferral. I still pay a little bit and then later on I pay more. But pay freezes is quite a difficult thing to do, right? And if you know that things are going to pick up, and they will, you may lose your good talent over that.
In a reward trends study, Mercer found that employers' top priorities for 2021 involve managing costs while delivering competitive pay and benefits at the same time. Employers also look to align incentives with business objectives as they try to improve the digital workplace and provide targeted value and pay to employees.
We have talent trends from Mercer coming up. There's a lot around reskilling people. How can we reinvent the way we work? Hybrid working, how do we collaborate? We can really give a positive experience to employers and managers, and pay should be incentivizing that.
As workplaces evolve, experts say certain jobs will demand premium salaries due to supply and demand.
We anticipate even salary increments to be on the higher side when it comes to technology professionals. Just in Singapore alone, the average increments is in the range of 15 to 20%. Now, in a normal other market conditions, it was probably 10 or 15%, so it has picked up, and I think the demand is definitely higher than what the supply is.
More firms in Singapore now plan to add headcount after hiring activities dipped by 35% last year, says Michael Page. Apart from technology, jobs in high demand also include sales and marketing, finance and accounting, logistics and supply chain, and human resources.
overall the sentiment is progressing towards optimism, but they're cautious at the same time. Singapore is a regional hub or a global hub for a lot of companies. So for Singapore to prosper, it has to get this connectivity going. And that's when we start to see the real potential uptick to the market recovery.
While compensation remains key in attracting talent, some say there has been a shift on how workers view pay.
In this market, you want to marry right. And that right has got an element of compensation in it, but it also has other pull factors. Things like the financial stability of the organization, how important is career progression within organization. Third, mental health and well-being of the employees currently and how they're tackling with the current situation.
Now there is an increased awareness and a consciousness about the purpose of the work people do. This was not something you heard about corporates till about a year or two ago. So even if that driver of pay is not as strong for an organization, if they're doing impactful work and they're able to articulate that into their employee value proposition, or EVP as we call it, then they're actually in a very good position to attract and retain their existing talent.